Good morning, everybody. Welcome to Pre-Market News and Views. Today is Wednesday, June 8th, 2011. There's a lot to cover here, so we're going to get right into the charts here. First off, the markets are continuing their late-day slide of yesterday, trading down about almost 6 points here on the E-minis. I guess 5.75, 5 and 3/4, down on the S&P 500 E-mini futures today. So again, pretty good decline. You can see the futures are off the lows just a touch, but nonetheless, it is a pretty solid fall here. We'll look at the volume there as well. So markets starting the day lower. The U.S. dollar index is trading higher, and that's always a catalyst to deflate the markets when the dollar is stronger. And you can see here the U.S. dollar index has had a really soaring morning, so to speak. Right around 5:30, 6 a.m. really took off, put in a little consolidation there, and then took off again. U.S. dollar index is trading up 35 cents on the day. That's a lot of meat and potatoes when you look at the dollar index. So again, good move on the dollar there. We'll see where this market is headed today. You do have some economic data out a little bit later on the session. First off, we're going to have right around 10:30. You're going to have crude inventory, so we'll see what the oil markets do around that time. They usually get a little volatile right around that 10:30 time frame. And then at 2 o'clock today, we have the Federal Reserve's Beige Book. Now, Ben Bernanke spoke yesterday, and I'm just going to go to the futures chart again and show you his speech. So if I just zoom in, he gave a speech right around 3:45 in the afternoon. So it was a late day speech right here, and you can just see the market really tumble. But it had already begun to sell off when comments were released what the Fed chairman was going to say, and it really just accelerated into the closing bell, trading all the way down to around 1282.50 by the close of the day. So big tumble yesterday. The markets were trading nicely higher, and then when the Fed chairman did speak, the markets did tumble. Now the big question is there going to be a QE3? Is there going to be a QE, something else similar to a QE2 coming out? What he did say was he's going to keep rates at 0% because the economy needs it, which is not a good statement considering all the stimulus that's been thrown at this market. You've had QE2, you've had the Fed funds rate, which is the overnight bank lending rate, at 0% since December 2008. So not a pretty picture there on the economic front. However, these markets are severely oversold, so there is a chance that you could see a short-term bounce at any time. But that's all it would be at this point, in my opinion, just a short-term bounce. Now, there's some news out of Europe that's pretty important. It looks like Moody's came out and said that the UK AAA credit rating could be cut if the government misses its debt reduction targets. So again, there's a lot of news out of Europe. Europe seems to be the focal point at the moment. This is not. Remember, England is not part of the European Union, but nonetheless, if the UK gets a debt reduction, debt rating cut, that is not going to be a pretty picture, okay? And most times the markets will usually react before that even occurs. So today, all of the European markets are trading lower. You have the FTSE 100 down about 1%. The CAC is down 1%. And the DAX, which is the German market, is down about 1.3%. So pretty ugly sell-offs in Europe at the moment. And we'll have to see how that all plays out. But nonetheless, Europe is the focal point at the moment, and there really doesn't seem to be anything good coming out of there. There's still problems with Greece. There's France is trying to block Ireland from doing what Greece did. This is just going to linger on for probably the remainder of the year and then some. So again, just really take this market one day at a time, one step at a time at the moment. You don't want to really get ahead of yourself at this point. So the Ben Bernanke comments really did very, very little yesterday. And again, we're seeing a weaker open today to begin the market. But we are oversold pretty much across the board. Now, let's take a look at the USO real quick. You'll see oil is down this morning. Here's the USO closed yesterday at 39.05. Today, trading at 38.71. So you're moving lower in oil, in the oil markets. If you take a look at the GLD, which is what I use for gold, I'll just clean this chart up real quick. Gold is selling off today as well. GLD yesterday closed at 150.42. Today you see we're trading at 149.50. So a sharp move lower on gold this morning to start the day. That could be on the back of a stronger U.S. dollar index as well. Let's take a look at SLV, which is silver. That closed at 36.12 today at 36.31. So again, all commodities seem to be under pressure today. Stronger dollar. Market is under pressure as well. The stronger dollar is deflating everything across the board. And we'll see where this goes today. I honestly don't know. All I do know is that we are oversold in the market. And when from oversold technical conditions, you could see short-term bounces. There are a couple stocks to take a look at this morning. JDS Uniphase, that stock is down about 3% or so. Getting a little bit of a bid now off the lows of the day, but it is a pretty sharp gap lower. Okay, so that's one that could be in focus today. Radio Shack is another one. RSH ticker symbol. That's down a little bit today. Was down a little bit more, getting a little bit of a bid. Volume is very, very light there at the moment. And then you had Gap Stores, GPS. That one is down as well. Gap Store is down about 2% at the moment. So, some pretty ugly declines in some popular names, at least to begin the day. On the upside, I'm not seeing anything really earth-shattering on the Gap hires this morning. So, again, we'll take it for what it's worth. But keep an eye on all the bank stocks today also. Bank stocks have been really what's been leading the markets lower. You could take a look at JP Morgan this morning, trading around $40.49, down another 25 cents to start the morning. But all the bank stocks have really led the markets. Take a look at Citigroup. I'm just going to punch up a daily chart on Citigroup. You can see ever since the stock did a 10-for-1 reverse split, it has really been pummeled, down almost a little over, just about 9 points from that reverse split. And that's a big, big move lower on Citigroup. So all the bank stocks are the leaders. Got to keep an eye on the bank stocks at the moment. I think they're really the most important group in the entire market. Yesterday, JP Morgan CEO Jamie Dimon did question Ben Bernanke. It was rather comical to see this guy ask a question in public about the bank reserve, cash reserves, is the reason why the banks are falling. And you would think Jamie Dimon would have a direct line to Ben Bernanke anytime he wants. So who knows if it was staged or what was going on there. But I felt that was pretty comical that JP Morgan CEO Jamie Dimon would ask a direct question in the public's eye right to Ben Bernanke. So again, not too much of a confidence builder there. But we'll see what this market brings. Again, be very, very cautious. We are dealing with oversold conditions. That's the only positive I could see for a bounce. Other than that, everything out there looks pretty negative to me at the moment. Okay, everybody. Have a great trading day. Those of you in the chat room, I'll see you on the charts at 8:30. Take care now.